Hello, good evening, everybody. If you if you can see my face and you can hear my voice, please type one in the comment section. All right, beautiful. Sorry, network was a little bit slow. I'm trying to change from network provider from one network provider to another one. So once again, I want to say good evening to all of you. And for those of you who are just getting to know Apicts Forex, Apicts Forex, we've been in a vision of training people or training young persons, though we train both young and old. We've been here for it's our seventh year in training people from places to places, back to back, young and old. You know, I've trained people from all walks of life. I've trained students under the age of younger than 18. I've trained 15-year-old students, secondary school students. I've trained very elderly persons of 70 years plus, retirees. I've trained lecturers. One particular that I trained some HOD of certain departments in some universities. I've trained bankers too. I've trained so I'm good at what I'm doing, And in our team, okay, I'm not the only tutor, but we run an academy. We run Apicts Forex Academy, and then we are not just around here, but maybe as time passes by, you get to know us, I want to just go straight to what we are in for tonight. It's okay. Many of you are just joining the class. What we are learning here is how to trade financial markets. How to trade financial markets, and that's very important. And I'm very uh, intentional in the choice of the word financial market, because many times what people know is forex. But then financial market is bigger, is wider, is broader. Okay, so what most people know is, and forex is just an aspect of financial market. Financial market is very wide, is big. It cut across different areas of instrument that you can trade. Okay, so I want to welcome you from everywhere you are or anywhere you are joining the class. I'm sure majority of us in this class are, undergraduates, and that's very beautiful. I was telling somebody in the office today that I wish I had this opportunity that you guys are having now when I was an undergraduate. I remember when I was in 200 level, I paid somebody to teach me to trade years ago. Years ago, I paid somebody to teach me to trade. From what he taught me, I didn't. In fact, how much he charged me was my like 2 month allowance from home. 2 month allowance combined was what they charged me. I was paying the guy bit by bit, little by little, and yet I didn't really get so much from the class. So it's a rare privilege that you guys are here and learning from somebody who is profitable in the market and somebody who knows how to teach. I actually enjoy teaching. I enjoy sharing. After you're trading, I enjoy sharing what I find out from the market. And the beauty of having a coach, later in life too, I was privileged to have a coach that made my journey very short. There are certain mistake I didn't make because I had a coach. See, you can learn to trade on your own, but I guarantee you spend a longer time. And you cannot actually learn perfectly how to trade just by watching one YouTube video or the other and thinking, oh, that's all there is. No, there's so much more there is. And that is why this class is spanning many days. I'm following a syllabus, I'm following a schedule, I'm following a well-arranged thought process, a well-arranged curriculum that you have designed to take you systematically and gradually from one level to another level until at the end of the day, you become a profitable forex trader. So I don't care from where you are. I only need your attention and I need your participation. Two things I need from you: attention and participation. If you can give attention and give me your ears, and you can participate in little tasks here and there, you need to participate. That's only when you can get it. Only when you can get it. Many years ago, I learned something that they practice in the medical world. So when a senior medical personnel, like a medical doctor, when he's training the younger medical doctors, what does it do? First of all, when you want to, perform an operation on a patient, the first time, all the students will be watching him doing it. They'll be watching him doing it. And so they are all standing there watching their senior or their boss, or I mean, say maybe their lecturer, their teacher performing operation. And then the second time they participate, they do it together with their with their lecturer or their teacher. And then the third time the lecturer watches them doing it. So what we're going to be doing in this class, I'm going to be teaching you, I'm going to be showing you certain things. Then after sometimes, you know, we'll do it together. We'll do it together. Then sometimes I'll giving you signals. You're going to trade. You're going to make money together. Then other sometimes you're going to be on your own. Then you're also going to be teaching people around you so that you can make lives of people around you to be better. Are we together now? Are we together now? So the first question I want to answer tonight is, what do we trade? What do we trade? And yesterday I was able to establish what is forex. And then I ran a lot of thoughts yesterday. What in the world is forex? What in the world is financial market? But tonight I want, okay, so let me quickly take you to the slide where I want to begin from tonight. So now this particular, all right. Can you see my screen now? Okay, can you see my screen now? If you can type 2 in the comment section, type 2. If you can see my screen, type 2 in the comment section. If you can see my screen, type 2 in the comment section. All right, beautiful. Thank you. Now, let me continue. Now, I just quickly did this slide tonight just to these 2 pages I wanted to teach you, and I just quickly inserted it tonight. That's part of what took my time. So, currency, what do we trade in the financial market? What do we really trade? Now, we trade currency pairs. This is what they call forex. When you are trading one currency against another. What is forex? Forex is when you buy one currency and sell another currency at the same time with the purpose of making profit, period. Over there, you exchange, when you go to the normal markets, in your community, you exchange money with goods. Somebody give you goods, they give you fish, they give you clothes, they give you shoes, then you give the person money, okay, in the normal market, okay, or somebody renders you a service. They help you to wash your car, they help you to repair your car, they help you to paint your house, they help you to build your house, and then they render you service, then you pay them back in money. But when it comes to forex, we exchange money for money. That is the only difference between the financial market and every other market. Here, we are exchanging money for money. So when you are trading forex, you're actually giving one currency out and collecting another currency. But the essence, the main purpose is to make profit. And when we do it electronically, doing it electronically is what we are doing in this place, because some people do it, you know, you get to these aboki, these houses, and then you buy, you give them your naira, you collect dollar, and then you keep the dollar in the hope that dollar will rise in the future. That happened couple of months back, even in our country, Nigeria. You see people go to the market, buy foreign currency, keep it. When the foreign currency appreciate, then they sell it. So what are they doing? They're trading forex. But this time around, it is not electronically, it is offline, it is physical. And so they are doing that for the purpose of making profit. So we have, about trading one currency against another currency. So you have Euro USD. This euro means, it is a currency of Europe. Okay, it's a currency. USD is United States dollar. Then we have GBP. GBP is Great British Pound. Don't worry, I'm still going to be getting there. I just want to introduce you to what we trade in the market. Number one, we trade currency pairs. We trade currency pairs. Let me write the word pairs in this place. We trade currency pairs. we trade currency pairs. So these are, you can see that the currency are always in pair. They're always in two. Euro, USD. This is the currency, GBP, USD. You know, it's like, let me do something. It's like you're trading NUSD slash NGN. I believe you understand this one like this. You know, USD slash NGN. For somebody who is in Nigeria and is listening to me now, it's like this United States dollar versus Nigerian naira. So you discover that in most of the currencies, in most cases, except few exceptions, in most cases, the first two letters talk about the country, the name of the country. The last letter talk about the currency of the country. So you have USD, United States dollar. Then you have NGN, Nigerian naira, JPY, Japan yen, GBP, Great British Pound, Great British Pound. That is how those currencies are. Only in the exception of euro that is just unique. So, okay, for example, you see something like AUD, USD. That's Australian dollar, Australian AU, then D for dollars. Then you have something like, NZD slash JPY. So there's New Zealand dollar versus Japanese yen. So and the first two letters in most cases represent the name of the country. The last letter represents the name of the currency of the country. Now, the second thing we trade in financial market is stocks. Stock, over stock here we have, stocks. You have Apple, APPL is representing APPL. These are not, this is not forex anymore now. This is stock. This is stock now. It's no more forex. It's no more trading currency against another currency. It is now, I'm trading stock. And I know, see, there are people that they only trade stocks. They don't trade any other thing. Stocks. Now we have Apple. Then we have Tesla. Then we have Amazon. I remember years ago, I used to trade Google. I used to trade Google years ago. In 2020, 2021, I used to trade Google. Then I used to trade Alibaba in 2019. In fact, let me tell you something that may surprise you. It is from trading Alibaba that I got to discover there is COVID-19 in year 2020. I'm telling you. Early 2020, it is from Alibaba chart I got to know something is happening to China. You know, Alibaba is based in China, and COVID-19 came from China, started in China. So I discovered that we were buying this particular stock. And our goal with my team was that I told everybody we're going to buy this stock for 11 months. I think we entered around November in 2019, and we're like, okay, by November 2020, we're going to close it, because I felt, I'm going to use the money to celebrate my birthday just for this stock. I was trading Google, Apple, no, I was trading Google, Alibaba, and I was trading Apple. These three stock, whatever what I was trading then. And then why? Because a year before, we made massive money on them, made money on Alibaba, made massive profit on Apple, made massive profit on Google. So it's okay, let's repeat it again. We made money last year. Let's do another one more year. Let's just enter a trade, and then we're going to stay there for 11 months to 1 year and close it so that I can use the money to pour champagne and cruise with my friend. And that was the around April the following year. I discovered that Alibaba that I used to appreciate was appreciating, and something started coming down, started selling. Of course, we're already in profit, and we have already locked some profits. We've been there for a couple of months now, and this time around we've been there for like maybe like about 4 months, 4 months, because it was in April. I was like, hey, what is happening here? I thought the chart was coming down. What is happening here? I didn't really understand, because the news of the COVID-19 has not actually reached Nigeria at that time. We have not started feeling it here in Nigeria. So I felt, what in the world is happening? So I remember, I remember the TV was on in the sitting room. As I was passing by, I was seeing news. I was seeing CNN, I think that's CNN or BBC, either of the two stations, where it was talking about, there's a pandemic in China, there's a pandemic. So I paused while I was, I was just trying to go from the sitting room to the kitchen, but this news caught my attention. I said, wow, something is happening in China. Something's happening in China. So I quickly rushed up, ran to the office, and I told all my team, everybody close Alibaba, close it now from the buying, and then let's begin to sell. Let's begin to so we started selling Alibaba. So we made money in buying it, and we also made money in selling it. As at that time, the uh, Google stocks and Apple stock are not yet being affected by this pandemic of COVID-19 until some months later. So what I'm trying to let you understand right now is that we trade stock even in financial market. Next to that is indices, indices. And these are very interesting things to trade, especially this number one and number three. I trade this number Nasdaq. Nasdaq, if I'm in fact, if there's one instrument I can recommend for you to trade, is Nasdaq. Why? Because it trends so much. It stays trending so much. Nasdaq trends, my guy. Nasdaq trends. It can stay bullish for months upon months upon months upon months. You go and check it. It's one of the most trending instruments in the financial market because I think Nasdaq trend more than gold. Either gold, if gold is number one, Nasdaq is number two. If Nasdaq is number one, gold is number two because I actually did an extensive research on it, and I can recommend you trading Nasdaq. Next to that is S&P 500. These are indices that are traded and they're attractive to traders. Very attractive to traders. USA 30, very interesting. Dow Jones follow price action like crazy. I love Dow Jones, USA 30. I love Nasdaq. I rarely trade S&P 500, but they actually function the same way. I will not recommend you to trade all of them together. Just pick one of these three, and then we have so much more indices. I'm just giving you a few examples per type of what we trade. And next to that is commodities. We trade commodities. Commodities, under commodity, we have gold, then we have silver, then we have crude oil. We have gold, we have silver, we have crude oil, natural gas. We have so many things. Under here, we have cocoa. We have cocoa. We have, sugar. You can trade sugar. They're called commodities. You can trade sugar. You can trade. What else can you trade? You can trade iron. You can trade anything. You can trade cola. You can trade coke. You can trade so many things under commodity. So under there we have gold. Usually gold is what people trade the most. And then next to what people trade here is crude oil. Crude oil. Silver is also very attractive. Is that I think I traded silver last week, though it was by mistake. I wanted to click gold. I clicked silver. I quickly made it to profit and close the trade. So we have silver. We have crude oil. There are people that trade crude oil. Crude oil is the only thing that they trade in their life. Then we have other commodities that are available to be tradable. And next to that, we have cryptocurrency. Under cryptocurrency, we have the Bitcoin. Okay, we have the Bitcoin. We have the Bitcoin. Then we have the Ethereum. We have the Ethereum. Under Ethereum, you can trade BTC. You can trade Ethereum. You can trade other ones too. You can trade. You can trade Solana. You can trade Solana. You can trade USDC. So many of them. So many cryptos that you can trade. Then aside the cryptocurrency, you can trade bonds and interest. Even in Nigeria, you can trade bonds. You can go to the bank and say you want to buy bond, government bond, or treasury bill. I know that my grandmother trade treasury bill. Can trade treasury bill. Then we have the beautiful aspect of it. I cannot wait. I can't wait to see you trading derivative synthetic indices. Then we have synthetic indices. My goodness. This is where we made stupendous money. Derivative synthetic indices. I'm going to be introducing you to derivative synthetic indices. I'm telling you. get ready to make money in with derivative synthetic indices. Get ready, get ready, get ready, get ready. I'm telling you, synthetic index, I have volatility, I have step index, I have crash, then we have crash and boom, I have jump, I have a lot of them. This in this number 7 category, I promise you money. I promise you, you will make a lot of money. There is synthetic indices, is a special market, and that runs 247. Okay, most of these ones, like if you trade currency pair runs from 5 days in a week. Sunday night, the market opens in Nigeria time around 10:30 p.m. Nigerian time. Stock, this stock opens in American time, I think around 1 p.m. Nigerian time, and then and then the Nasdaq also opened around afternoon, 1 p.m. Nigerian time, especially the New York session, and so this is what we trade in the financial market. This is what we trade. Are you still with me? Are you still with me there? Okay, if you are with me, type 3 in the comment section. If you are still with me, type 3 in the comment section. If you are still with me, type 3 in the comment section. All right, beautiful. So let's continue. Let's continue. So now I want to quickly take you to Forex terms. Forex terms. Okay, Forex terms. Forex terms. So here now, these are the terms that we're going to be looking at our trading platforms. Number one, I've already shared with you what we trade. Okay, now where we trade, where we trade is called the trading platform. Trading platform. That is where what gives you access. Don't forget that this market is a global market. The forex market is a global market. It is a market accessible anywhere in the world, as long as you have internet and then you have your device. So what will enable you to have access to this market is what we call trading platforms. I'm going to be introducing you to just two of them for the purpose of this class. Just two of them. Number one is MetaTrader. MetaTrader 4 and MetaTrader 5. It looks like this. MetaTrader looks like this. This is MetaTrader. MetaTrader 4, MetaTrader 5. You see MetaTrader screen, and I'm still going to get there. I'm still going to tell you, I'll be teaching you how to use MetaTrader effectively in this class, in this training. Okay, so you have MetaTrader 4, MetaTrader 5. Okay, MetaTrader 5 is the latest one. MetaTrader 5 was the one that was before my MetaTrader 5, and both of them are good, they are great. But I think I'm going to be spending more time in advising you and teaching you how to use MetaTrader 5 because it is more upgraded, it is more advisable now. I remember years ago, I used to tell my students to stick with MetaTrader 4, but now the improvement on MetaTrader 5 is now undeniable. It's very attractive. So many things that are possible on MetaTrader 5 that are not possible on MetaTrader 4. So for the purpose of this training, get ready to get familiar with MetaTrader 5. MetaTrader 5. Then candlesticks. Candlesticks. Candlesticks is the language of the market. How do you interpret the market? How do you interpret the market? How do you know where to buy? You need to understand that in this market, there are two things we do. We are either buying or we are selling. How do you know where to buy, where to sell? The language is called the candlesticks. And of course, before the introduction of candlesticks, the use of candlesticks, we had the buy chart, we had the bar charts, then we had the line chart. First of all, we had the line charts. After line chart, we have the bar charts. Then all of these were improved upon, and that's how we arrived at candlesticks. Somebody in China, developed this idea of candlesticks mainly for the purpose of selling rice in China. But then it was adopted later on in trading financial markets. So candlesticks is what we're going to be focusing on now. How do you use candlestick to your advantage? How do you use to interpret the market? It's just about and the moment you understand the use of candlesticks and the use of analyzing candle, using candle to interpret the market, I guarantee you will become profitable in the financial market. The whole secret of having an edge in the market is appropriate analysis of understanding of candlestick formation through price and time. We're going to help you. Then we're going to talking about the pips and lot size. Pips and lot size. In the purpose of this class, you need to understand what is pip, what is lot size. Then we're going to be talking about risk to reward ratio. We're talking about how to take profit, how to do your stop loss. Then talking about the bulls and the bear. Talking about buying and selling in the market. In the market. So this is how candlestick looks like. Candlestick looks like this. You have, you have the blue ones, then you have the red ones, the blue and the red, the blue and the red, the blue and the red. And normally I use be teaching you all of that. So, but this is how candlestick looks like. I'm still going to be taking you to the chart. This is how candlestick looks like. Okay, this is what we're going to be interpreting, and you can see that the candles have different formation. Look at this one, is long. Small, the body is small, the wick is long. The body is small, the wick is long. This candle has a name. This candle has a name. This candle is called a doji candle. A doji candle. This candle plus this candle is called a bearish engulfing. Then you have this particular candle called the hanging man. The hanging man. Then you have this particular candle again, another doji, another doji. Then you have another doji. Then you have this candle called the the shooting star, or the shooting star, especially when it's formed at a resistance. Then you have all different anatomy of candlestick formation, which you're going to be paying attention to for the in the purpose during the course of our training. You will understand how what candles formation is, how they can give you signal for an entry, how what is a doji, what is a engulfing, what is it, this and that. We're going to be spending time. I'm going to be teaching you very few specific candles that almost never fail, in giving you a right signal in where to enter, your enter where to enter the market. All right, so we have, and you also need to understand that when it comes to forex against price, we are trading time against price. Time against price. Time against price. That is what we are doing in the market. We are trading time against price. Never forget that. Never forget that. It's always time again, because if you want to be trading, if you want to trade forex, you must be time conscious, you must be price conscious, you must be time conscious. So this is how candlestick looks like. You see the body. This is the body of candlestick from here to here. It's called the body. The upper part is called the wick. It's called the wick. So we have the opening price, we have the closing price, we have the body of the candle price here, upper price here, we have the lower price here, we have the opening price, we have the closing price. So look at this opening price now. Let's assume this opening price. Let's assume, and let's see the closing price. The closing price is 1.4077. Let's assume 1.4007 opening price, 1.4007. Okay, 4077. So now that means when the price open at 1.4007, then it closes at 1.4077. The distance between the opening price and the closing price is measured in pips. Is measured in pips. Pips. P-I-P-S. P-I-P. We're going to know by how many pips has this market moved. Now, what we're going to be we're going to be subtracting 1.4007 minus 1.4007, and that should give you 70 pips. That means when the price opened here and closed here, it has moved 70 pips. 1.4077, because it's going to give you 0.0070. It will give you 0.0070, and that is 70 pips. Why? Because you see, the price usually have 4 decimal places, especially exception of JPY. JPY pairs have 2 decimal places. All other currency pairs have 4 decimal places, or sometimes 5. Our interest is always on the first 4. So we have 1.4009 and then 1.4077. Now, if this move from 1.4, okay, for example, when this one move from 1.4007 to 1.4008, we say that the price has moved by 1 pip from 1.4007 to 1.40. Price has moved by 1 pip. 1 pip. If this thing move from 1.40 4017. If it moved from 1.4017, we say the price has moved by 10 pips. 10 pips. Price has moved by 10 pips. So if you now that the price has moved from 1.4007 and closed at 1.4077, it has moved by 70 pips. That's how to know pips. 70 pips. So you can see, you will see the chart. We're going to still get there. All of you go to open the account, and then you will see how this actually play out. See, this is how it looks like. 1.400. This fourth decimal place is called a pip. The fifth one is called pipettes. But our focus is on the four decimal places. After this decimal place, 1, 2, 3, 4. So if this price move from 1.400 40051, that means price has moved by 50 pips. 50 pips. If this thing move from 1.400 1.4011, the price has moved by 10 pips. 10 pips. So that's how to calculate the pips in the market. It is the unit movement of price in the market. It is unit movement of price in the market. That is a pip. A pip can be defined as the unit movement of price in the market. In the market. So now look at this now, Euro USD. So when you see something like this, what it's saying is that when you have one USD, it is equivalent to $1.4. $1.4. $1.4. That means the one on the left is called the base currency, the one on the right is called the quote currency. That means this is 1 to 1.40. Okay, so that means when you have €1, it is equivalent to $1.40. This is how it is written in the market, $1.40. Now, so which currency pairs are traded? I think I explained this earlier, and I said the most popular currency along their symbols are shown below. USD, USD. That is, the US means United States. The D there means dollar. Okay, that's a nickname. Buck. Euro is euro. Euro members euro. Then it has a nickname fiber. Then I explained this to you the other time too. JPY, Japan yen or Japanese yen. Japan yen. GBP USD, GBP rather, Great British Pound. That's a nickname. Cable. CHF, Switzerland franc. Switzerland franc. Okay. Then CAD, Canadian dollar. CAD. CA Canada. D for dollar. Now, of course, the CHF is different, is unique. Those are the exceptions you have when you are in the currency naming. And then you have AUD, Australian dollar. Then that's a nickname, Aussie. Then you have New Zealand dollar. You have NW New Zealand. Then dollar. It has a nickname, Kiwi. Now, currency distribution has reported FX turnover. Now, the USD, United States dollar, USD, is the most powerful currency in the world. USD is the most powerful currency in the world. Are you still following me? Oh, you follow me? If you are following me, I'd like you to type 3 in the comment section. Type 3 in the comment section if you are still following me. All right, beautiful. Let's continue. Now, is the most powerful currency in the world, but it is not the most expensive currency in the world. It's not the most expensive currency in the world, but it's the most powerful. You can see from this pie chart the power of United States dollar. See the USD. See the volume it covers. See the volume it cover. Next to that is the euro. The euro is the next most powerful currency after um after USD, euro. And that is why euro USD. Imagine combination of this euro USD is it has the largest traded volume every 24 hours in the market, the largest traded volume. So if I'm going to be recommending an instrument for you, Euro USD is going to be one of them. It's going to be one of them. Then we have the Japanese yen here covering this particular space. Then we have the pound sterling, that's GBP, GBP, here now covering there. And then we have the Swiss franc and others and others and others. Now, let me take you further. So we have this Euro USD, Euros are AUD USD, GBP card. These are the instruments that you can trade. These are the instruments that are tradable, the currency pairs that are tradable in the markets. In the markets. Now, this is where I'm going to close to the end of today's class. Now, let me take you to major currency pairs that if you're going to be trading Forex, these are the instruments that I want you to focus on. Why? They are called major currency pairs. They have the higher volume of you know, they have the highest traded volumes or higher traded volume compared with other minor pairs. So we have minor pairs, you have exotic pairs, you have different kind of categories of groupings. But these are called major pairs. Euro USD, most powerful. And then you have USD JPY, then you have GBP USD, you have AUD USD, NZD USD, United States dollar, United States dollar versus Swiss franc, USD CHF, then USD CAD, United States dollar versus Canadian dollars. Now, these account for over 70% of turnover in the market. So, if you want to trade an instrument that has volatility that quickly take you into profit and profit, that you can reach whatever take profit or stop loss, as fast as possible because of their liquidity. These are the major pairs I want to focus on. And so you can also trade commodities too. Like now, gold is one of the most traded commodities now. I mean, commodities, not currency pair, commodities in the world, gold. Then Nasdaq is there, like I said earlier. Dow Jones is there, USA 30, like I said earlier. Very, very important. Very, very important. This currency pair. So you're going to be checking charts now, checking chart henceforth. These are the instruments I want you to focus on now, and I'm going to be teaching you specifically how to trade. All of them. I'm going to be sharing general rules and specific rules based on the behavior of this instrument. Then, so this is how it works. You have Euro USD. The one on your left is called the base currency. The ratio is usually one. The value is one. Then we have the one on your right hand. You have you are using this one to quote this one. The base currency, the quote currency. The base currency, the quote currency. So you're using USD to quote euro. That means when you have €1, you actually have 1.4140 USD because we are using USD to quote euro. Now, are we together now? Are you hearing me now? Do you understand what I'm saying? So that is how to um okay. So that is how the currency pairs are. So now I've taught you what we trade and I've taught you where we trade it. I'm going to be going deeper tomorrow. Or most likely I'm going to be recording a class, give a pre-recorded class, depending on how tomorrow looks like. So this is the one I want to focus on tonight. Just then I'm giving you. We're going deeper tomorrow. We'll be going deeper tomorrow. And but before then, I like you to perform a task so that you can have access to all these MetaTrader and the likes. You can have access to trading together with me tomorrow. Or maybe let me take you to my chat. Let me take you to my chat. Okay. Let me take you to my chat. Let me share with you the like I wanted to share with you. Let me share this with you. Okay. All right. Yeah, you can see my chart now. Beautiful. Beautiful. Let me quickly do something. All right. Now, this is how it looks like. Oh, good. Then this is under commodities. So you can have stock. You can see it on my screen now. You have stock, you have fund, you have future, you have forex, you have crypto, you have indices. Other indices now. Let's see what we check. Let's see what we have there. Other indices we have. Let's say Nasdaq. Nasdaq. You can see Nasdaq now. That's Nasdaq. Okay. So you click it like this. If you click it like this, you could trade. You could trade. So let's get back to forex, or let's come to this place. Let me show you uh gbp usd. This is trading view. Oh, I forgot about. Let's search for Tesla here. See Tesla. I've clicked on Tesla now. Okay, so Tesla has come, and these are the things that you can trade in the market. So you see 5 minutes, you see daily, you see weekly, you see monthly. This what are the best time frame that you're supposed to be using in the subsequent class. So at this juncture, I'm going to end this class. I'm going to end this class at this juncture. Okay, let's end this class here, and we'll continue from there tomorrow. We'll continue from there tomorrow. Thank you.